Mr. Kalyan, Petnet, LNG and a couple of these other companies like GAIL, etc. have been under pressure though on concerns of what may happen on marketing margins. The market's beginning to come off a bit. It's infrastructure primarily that's beginning to pinch. So Reliance Power, JP Associates and a couple of other rate sensitives as well, such as the banks, are just getting that bit soft. So down to the lowest point of the day now for the Nifty at 48.32. But let's talk a bit more about the market and about specific stocks going into this year. Tirthankar Patnaik of Religare Capital joins in to talk about that. Tirthankar, morning. Before we get talking about your specific stocks, what is the Religare year-end target on the market and what are you underlying that with in terms of earnings expectations?
Mitali, we have a Sensex target of 18,000 for the end of the year, where we are looking at earnings growth of about 8% for FY12, for the rest of FY12, and for FY13 we are expecting about 12%. This is at a discount to the consensus numbers, where we believe that the rupee's depreciation over the last quarter or so is something that analysts will start putting in their numbers beginning the third quarter. So, if you look at the Sensex EPS, we're looking at about 1120 for FY12, and FY13 we're looking at about 1250. And from a valuation perspective, from this EPS, we're taking a 20% discount to the long-term average. The Sensex, trades at has traded at roughly 16x. Over the last 20 odd years, and we are looking at 13x for our target. We believe that given the current slowdown in the economy, where we are expecting 6.4% for FY12 and a marginal pickup to 7.1% in FY13, there's no reason for the market to re-rate just yet. So 13 times multiple should give us about 18,000.
Okay, let's get cracking on your individual stock recommendations, Tirthankar. The one that will raise some eyebrows is SBI, which is one of your big picks this year. Walk us through the argument there.
See, most negatives on SBI in terms of asset quality have been known to the market for some time. I think the core argument, if we come to it, everything else, low capital, this is all known and priced in for the market. SBI is a very, very liquid stock. What is key now is what happens with asset quality. Our numbers are different from the street in terms of asset quality. We believe that, beginning third quarter, we should see lower numbers in terms of slippages coming through. So, our numbers are about 70 billion versus the street's 80 billion and above. And going forward, what that would translate into is, lower provisions, and therefore we're looking at about 39% growth for FY13, which is built again on top of about 40% for FY12. So that's essentially the core argument. Everything else is pretty much known here.
From the autos, Tirthankar, you've picked M&M, and that was consensus favorite for a lot of people till last year, and only of late people have started getting a bit cautious on that name.
I think the core argument for M&M has been the rural, economy, rural growth has been strong, and what we are seeing is, there have been conflicting, when we speak to clients, there are conflicting news about what is happening about, in the rural sector. What we see in our own dealer checks is that sales are going through. There are no inventory, inventories building up at the dealer levels, and from a core rural growth perspective, while there might be a temporary breather, we don't believe that the core drivers of the rural economy in terms of a fiscal push, in terms of the whole Indian diaspora, transferring capital to the rural regions of the country, that has slowed down at all. So I don't think anything but a temporary breather in the line. And specifically, let us say on tractors, I think the tractor business is one business where the street also has had concerns. After 30% CAGR of 5 years, people are rightly expecting a slowdown. What we can say there is the management has been guiding at double-digit growth. Our numbers build in about a single-digit, 5% going forward. So despite all that, we have a target price of 950. So we remain positive on the stock.
From the mid-cap space, Cummins is one of your top picks for this year.
See, I think Cummins is a stock where one should get in at this point. There's nothing fundamentally wrong with the company. It's essentially a macro slowdown. what we should understand for Cummins is that it is a stock which is in a very, very high entry business, high entry barrier business. It's in in the so-called high horsepower generator sets. It has more than about 70% market share, and it contributes to about 40% to Cummins' top line. And if you include other businesses like the services business, so you have 60-65% of Cummins' business which is not really at risk in a slowdown. Of course, we will see growth tapering off for the near term, but this is a stock one should keep from a long perspective, long-term perspective. And this is, major competition in this business is only from one player, which is Caterpillar. Everything else in the low horsepower or the medium horsepower businesses is is something which has low margins and which is not where the Cummins' major power is. This is a stock one should keep for its market dominance and extensive distribution network, which will ensure that the business case remains for many years to come.
Your top pick from IT is Wipro, Tirthankar, with a target of 475, which is quite a bit of an upside from where it's trading at right now. Is that a dark horse call for you?
See, we've been positive on Wipro from almost 350 levels, and the stock has gone up. I think Wipro, a couple of things have to be seen. Right now, we are not very positive on the IT sector as a whole, because going into third quarter and fourth quarter, this is traditionally a weak season for IT. Things will start moving up again in the second half of the year. But what one should see for Wipro is that I think if you see their top 5 clients or top 10 clients, some sort of improvement has gone on. The revenue penetration there has increased. We believe the company, especially the management, has increased data mining in those critical elements where we believe that it should translate into the valuation discount versus INFI, which is at around 10% now, should narrow. So amongst the IT space, Wipro is one space, company where we think management and basically their increased focus on their top clients should stand in good stead. So on a relative basis, we will prefer Wipro.
From the financial space, you like PFC.
We were negative for PFC almost since March, April of last year. We all know why SCB losses have been one major overhang on these monoline businesses. But what one should see is it all in the price now? And what we also should see is incrementally how does news actually impact the stock? The stocks are at a juncture where there are no incremental negatives, and the market is searching for positive news. And we believe that from business perspective, tariff hikes by Rajasthan, TN and other states should stand in good stead, at least for current cash levels. Cash losses, we believe cash losses should come down in FY12 and should fall further going forward. And if you look at the Shunglu committee recommendations, nothing new there. All has been said in the Electricity Act earlier. But if at this point they are taken in much more faith and things happen on that front, we should see an improvement. So PFC is something we should give you a 10-20% pop before we know it. So this is one stock we will be positive on. And of course, if we are looking at an easing interest rate scenario, and we are building up about 100 basis points rate cut by the end of this fiscal, PFC is one business, of course, which should, as a wholesale funded business, we should benefit.
Thanks, Tirthankar, for joining in with your picks. That's Religare strategy for 2012. Don't bet on the index. They think that will be relatively range bound, but individual stock selection will actually get you the big gains this year. Their top list is State Bank, HDFC, Hero Motors, Wipro, BPCL, Ambuja Cement and Cummins, PFC, M&M, as you heard from Tirthankar. Markets very quiet, 0.5% down still for the Sensex and Nifty. But here are some commodity trading bets. When we come back, we start focusing.